The stablecoin economy is kind of a bad word, right, for it?
I think it's a terrible word.
I'm here at the Barcelona airport, about to meet Itamar, co-founder of Ready. He's a true pioneer in the space of what's now called stablecoin economy. Built a stablecoin neobank called Ready, formerly called Argent. He has founded it in 2017 and has gone through all the phases of DeFi, of the early stablecoin economy, and now this open financial rails that we're seeing. And I'm going to talk to him about that to understand what are the features, what are the properties that make this so much better than what we're seeing in the old world. And he does know about it because he's been working in traditional finance and technology before. So he's a great partner to talk to. We will also address what drives this industry, what are trends, and what forces will define losers and winners of that industry. We want to understand where does he see the stablecoin economy in 3 or 5 years. He is extremely diligent about user experience. That always has been extremely important to him, and he identifies that as one of the key points for driving adoption. And I want to talk to him about money and identity. Itamar, thanks for joining us here with the Money and Identity series. I was wondering, you've been working in the intersection of finance and technology. What finally brought you to found Ready?
Thanks for having me, Julian. So when we started Ready, at least the idea of Ready back in 2017, it was very clear that crypto networks had a massive potential to really remove friction in finance, in payment. But we also saw a future where potentially everything would become custodial because self-custody was way too complex. And so we decided to tackle that problem.
Nowadays, people are have renamed this to being the stablecoin economy. Can you help us, how do you see that? What type of animal is it? Is it still the same that you looked at when you founded Ready in 2017?
I think it was a very necessary step. When we started Ready, I would say Ethereum was money, ETH was money. I still think it has some of those properties, but realistically, we realized that to grow beyond this niche, we needed to embrace the money everyone knows, whether it's the euro, the dollar, etc. And so stablecoin plays a significant role there. We also see it as a platform to build on top. So it's a way really, in some way, to bring embedded finance to developers.
Now some people say stablecoins make payments faster, cheaper. Others say it's for getting into a stable currency like the dollar. What would you say? What features are you most excited about? What is the thing that changes the primitives of finance?
So I think it does play on different layers, and clearly those elements like faster settlement of payment is one of them. For us, I think one thing that was really noticeable is that it's almost more a tool for us to achieve our vision. So this on-chain alternative to a bank needs a platform to be built on, to deal also with regulation and many other challenges. And using a stable coin basically gives us out of the box a lot of the properties we need to achieve that vision.
We are at a time when Stripe is buying Bridge for $1 billion, which is eerily similar to what Facebook was doing with the Instagram purchase. Do you think we are at this intersection and we see a meteoric rise like we've seen with social media? Can you give us a look in the crystal ball, where are we going to be in 3 or 5 years?
I think clearly something is changing and we are seeing an insane acceleration. The data is there. The question, are we at a fork, or is there only one path? Are there two paths? I think clearly we are seeing a world where the stablecoin economy or the stablecoin technology is just totally hidden from users, used by incumbent players with the same old properties of TradeFi, where they have full control of your assets, full control of your identity, they can freeze your funds, they make those decisions for you. And so I think the big question is, will we see also a parallel universe where users have more freedom and more control, still leveraging that same infrastructure?
Maybe to dig a bit deeper on that, where's the difference of the stablecoin economy and the technological base layers and fintech? Is it just another fintech wave, or is it a whole different approach? How would you see it, given that you've been working you've been at Visa and Amazon as well, right?
Yes. I was at Visa, at Amazon, and really that's what also drove me there. I saw how payment was working, how clunky payment was, how much duct tape there was in payment. And so when you look at using a blockchain and a stablecoin, you remove a lot of that friction. But so to your question, I think there will be different ways this can be used, and indeed in some way it will just be a way to reduce costs for those players. We won't change drastically the properties of the financial system. And then another way is to combine stablecoin also with more self-custody mechanism, with DeFi, to create more of a parallel financial system. I think we are seeing probably both evolving in parallel.
We've seen in the first wave of the internet, if you're looking at e-commerce, you didn't see the brick and mortars coming in and winning anything, right? It was the new incumbents that completely ate their lunch. Now with social media, that might have been a little bit different, where you see companies prevailing because they aggressively buy. How do you see that shaping up in the future? Are there going to be parallel systems that will fight against each other, or is it going to be more of a monopoly play that we're seeing in social media?
I think this is what I hope and what I see. I think clearly as an ecosystem in crypto, we were too slow to bring, I think, the benefit and the user experience users expect. And so this gave time to incumbent to embrace the technology. Not all of them, but clearly there's a generation of more younger incumbent that have been very interested in crypto and have embraced it and are moving now very fast. So I still think it's a race to see if the more open ecosystem can figure out the right user experience, the right benefit, and carve its own niche, its own segment of market. I think they can definitely live in parallel. Not everyone needs those new solutions. There are markets where existing solutions serve extremely well users.
Talking about markets, what are the most interesting markets? Where do you see, when we see this as the browser moment, right? Like, we've built the tools, now people need to come up with the applications. What do you think is gonna just skyrocket and be one of those applications that we will see that people build with those new tools?
So if I look at least at Ready internally, we feel we're in that phase indeed where we need to narrow down the few key segments. We see quite a few interesting ones, but different segments also want different properties of this ecosystem. So for example, I just moved to Buenos Aires for 5 months, exactly for that reason. There it was really an element of self-custody property, which was they have such a distrust in the institution. They are really, users there are asking to live in a parallel economy outside of their country. They don't want their life to depend on their government and their own economy, given all their history. You could do that by having a bank account in the US. You are in a parallel economy. But self-custody and stablecoin is actually a very low friction way to enter a parallel economy. So there it's really a mix of that and also inflation that drove them to different system and also different currency, the dollar. There are other markets, I think, or more high earner segments that are interested in taking risk in different type of asset class. So for example, just buying Bitcoin or Ethereum in itself is a benefit. People also worry a lot, I think, even in any market, even in the Western world, people worry a lot about the state of the world. And so having this security blanket of having some money under self-custody, the same way people like to have some cash or gold, it's a very different segment from what I described in Argentina, and we see quite a few of them.
Mm-hmm. Are there other segments that you see? You said it's very market specific. Are there other properties that you ascribe to stablecoin economy that will play a bigger role in the future?
I think a large one we see actually is just access to new type of opportunities. So if you look at the type of yield you currently have on chain, with higher risk but also higher yield, or even the products that exist in the traditional world are not very accessible. So you have some hedge funds that can be tokenized. We have interesting products coming there, and these are just people that really don't care about crypto, don't care about self-custody, but they're interested by new type of investment that they don't get through their traditional bank.
Yeah.
So this is probably the largest market actually. Just requires to set the bar very high in terms of the user experience we can provide.
Talking about that, I mean, you already touched base on it, but you know the old system quite well, and obviously there are a bunch of opportunities that we have adopting stablecoins or the base rails of it. But where do you think, where does the old technology stack still have a leg up?
So I think there are a lot of areas where we all live in the old technology stack, and we decided to embrace it. So the Ready card is probably the most successful product we have, because today to pay in a store, this traditional form of payment is just ubiquitous and it's fantastic. Using your phone, tapping on terminal is as low friction as it gets. And so there, for example, I think they have a strong lead, and I'm not sure we will see in the short term a direct crypto payment mechanism at retail store. It can be done. I think we'll see more and more experiment, but that's a very good example where the traditional financial system is extremely good. An example where TradFi is probably less good is remittance when FX is involved, where a much more transparent system on chain would probably reduce costs significantly. And we see already growth in that usage of stablecoin. And then also, but that's more interesting I think for Incuban if they look at increasing capital efficiency. So faster settlement, less needs for liquidity in different parts of the world makes the whole system just more efficient. So we'll see this hybrid model where it's traditional finance but using faster settlement rails, and that's what a lot of players are interested into.
If you're working with different modules to provide remittances, cards, how is this going to develop? Is that going to explode like app usage, or is that still going to be like something that needs to be carefully curated?
Well, that's I would say really a strategic and product choice. In our case, with Ready, we are going for high curation, but really because we are looking at a segment that want extreme simplicity. So Ready is not, at least today, a trading app with hundreds of tokens. So we're really going for great UX, which for us comes also with peace of mind, and too many options, too much choice means more complexity. We have also a wallet where we have full freedom, full openness. On Ready, it's curation, as long as we maintain our value of self-custody, being fully independent, full control of your funds.
What do you think are the driving forces that will define winners and losers in the next couple of years in the stablecoin economy?
So I think you will, again, because I see those two paths, the incumbent embracing stablecoins, so clearly those are the ones that move the fastest, that are ready to make bets, and you already see there within incumbents two very different worlds, the like of Stripe, the like of Revolut, are very aggressive, are embracing it, and some have been lagging in that adoption. And then we have this more open world of trying to invent a new system where it's, I think, a race to identify large segments that really benefit from this alternative we can offer. So whoever can build especially on consumer side, a consumer product that has fast enough adoption, I think can win, versus staying too much in that niche of crypto, of just being like a wallet to access a few apps. I think that's really what will be the key challenge here.
It seems like there's the crypto world adopting and eating into the traditional adopting financial tools to just make sure it spreads faster, and then also at the same time the traditional financial rails moving and adopting our open standards but keeping it closed. Who's gonna win this race?
I hope we will win. I hope the open world will win. I think you have example in history where the closed system have destroyed everything out there. So social networks, I think that you mentioned, is a good example. But then we have an example where open source has worked better, whether you look at Linux or Android. I suspect we'll see both. But clearly you cannot start today an open alternative to a neobank and start by a segment where Revolut is strong. That would be absurd. You need really to find areas and segments where you can really offer a strong edge. And then yes, at some point you will grow, we will want to go where Revolut is, and Revolut might go into those smaller segments. So it's really a race to carve large enough part of the market, also to show the world that there is an alternative that is better out there.
If you were to go back to the 90s with everything you know now, and you could actually pull some levers to make the design of the internet change, what would you do?
That's a difficult one. I think let's start by seeing what went wrong. I think if you look at when I started working in tech a long time ago, when I joined Amazon, and I think we all felt we were making the world better, removing borders, whether it's in commerce with Amazon, in payment at Visa. A lot of people came there with the right vision, but the worst thing I think that we have seen happening is probably the breakdown of society through a breakdown of trust in news, probably the fall down of journalism, probably because of social network. But I think it goes deeper than that. Is because of this attention economy, where you just need a drive for eyeballs. And swiping through news feeds or short videos, etc. So we have a population that doesn't trust news. We have also journalists that have to play that game, and so have clickbait, have poor quality content, because the faster is out there, the better. You have users who have no zero attention span, and a generation with no attention span. At the same time, now we see proliferation of bots, and so manipulation of an election, manipulation of population. We are being manipulated daily. So that's the problem. Now what could we have done differently? I think one is probably something to do how we monetize the web. And I think that was probably Mark Andreessen mentioning the lack of payment as the original sin. If you had payment embedded in the browser, or even micropayment, would we have paid for content and create those habits rather than rely on advertising? Once you rely on advertising, then it's all about eyeballs and attention. And then the second one is actually probably identity. If you have some form of identity or cyber resistance embedded in the web, then bot proliferation would have been much harder, etc. And if we could have relied on open standard basically for payment and identity, we wouldn't have to rely on centralized, closed, gated system to protect us from that, while at the same time they make money out of that.
Yeah. The stablecoin economy is kind of a bad word, right, for it?
I think it's a terrible word. It's a terrible word. It's an economy. We have the world, we have an economy. How do we improve it? How do we make it work for everyone and not just for a few? I would rather call it an open economy. And yes, it's not perfect. Stablecoins are controlled by central issuers, but I think we can still play a very strong role on removing friction, making work for everyone, and just think about the entire world having access to currencies, whether it's dollar or others, the entire world being able to interact on the same network. There's something really powerful. Usually when you remove friction, if you make, we move from letters to fax, then to email, then to text messages. Anytime you improve friction, you increase in some way prosperity. So I do think that's what that open economy has to do.
If you were to put the finger on the enablement factor from a technological perspective, like what is the characteristics that makes this potentially replace the banking infrastructure that we have?
So something we probably didn't talk about, which is enough, which is probably the biggest property, is permissionless innovation. You are creating fundamental building blocks around the ledger, around financial instrument, lending, trading, also around money. So stablecoin, but you could see also ETH and Bitcoin as other form of money that would be more censorship resistant. So we're creating all those building blocks, and now we're telling people, any one of you can come and try stuff, innovate, build application. And that's the compounding effect, I think, that can really make a massive difference. So think about them as platform rather than end products.